Hi everyone, if you're thinking of buying, building or renovating, this is the place to be. I am Nikki, CEO and founder of Totally Wicked Group, and welcome to our Totally Wicked Q&A live. This is where you ask questions from Totally Wicked experts about how to buy and build smarter. Get that all out of the way now. So tonight we have money man Scott Beattie from Cube Home Loans. So we'll be talking about all things finance to do with buying, building and renovating your home, some stuff about government grants, building if you have an existing mortgage, buying new, buying existing, cost of renovations, whole heap of awesome stuff. So we're going to get started soon to give the stragglers a chance to sign in, make sure no one's missing out. But thank you for being on time. We're going to talk for about 30 minutes, see how we go. In the meantime, please share that you're watching, tag anyone you know who might benefit from tonight. And if you want to keep up to date, you can get a summary of what we're talking about tonight, as well as a link to their videos, as well as a whole heap of cool other checklists for buying, building and renovating. Sign up to our newsletter. There should be a link going in to the comments pretty soon where you can just sign up for free and keep in touch. So the whole point of all of these Q&As is to give you guys a whole heap of information. And it's not about selling, it's just about experts coming and giving you advice. The one thing is, disclaimer, this is all general information. So don't act on anything that we say unless you actually talk to someone about your specific needs, because councils are different, loans are different, equity is different, everything is very, very specific to you. So this is just general information, which we'll hope will help you make some right decisions about where to go and what to do. Next month, we'll be doing the second Wednesday of January, because the first Wednesday is like the 5th or 6th or something. So I figured everybody's still going to be in cool holiday mood, just chilling out. And it will be just me, but I'll be talking about kitchen design and renovations and how to choose finishes and design trends and all that sort of fun stuff. So what's that date? That's the 13th of January will be the next one. So stay tuned for that. So, Scott. This is Scott from Cube Home Loans. So in his 30-year career in insurance and finance industry, he's won All-Round Broker of the Year in 2019. He was the winner of the MFAA Diversified Business Award, along with leading his team to win the Best Independent Office in 2020, 2017, 2016, and 2015. So I want to see his pool room. Local business, started with his wife Jo back in 2005 and has a long winning state or national titles in all but 1 year of operation. So the red carpet is lined out for him as well. And since starting the business, Scott has personally settled over 1,500 mortgages for his clients. He's also site administrator of a Facebook site called Men's Finance Advice. So please feel free to get on that page, which has almost 10,000 members. You might go in there and ask questions and get some more cool stuff happening.
For sure, thank you.
And also send in your questions tonight live so that we can answer them. Welcome, Scott.
Thank you. Also, I'm very pleased that the State of Origin is not on tonight. So that's,
I know.
That's
that was such an oversight too. I was so annoyed.
I did listen to David's talk, and what actually fascinated me about that was, it reminded me when he did it, was about the meth test. Getting a meth test on your proproperty, something I never would have thought to do. So, there was a pretty big standout moment.
Absolutely.
For me before the Origin, watching that one.
Yes, I saw that. I saw the time for Adelaide and went, oh, that's great. But no, it wasn't the time for Adelaide. Anyway, no State of Origin.
Fantastic.
All right, so first question. Why would I go to a broker versus a bank?
Look, I'm a little biased, obviously as a mortgage broker, and I have been for the last 15 years, but I have worked on both sides of the fence, both as a banker and as a mortgage broker as well. So the ultimate thing is it comes down to choice. So if you walk into a bank branch, you've got one option, or from their potential limited product range, from perhaps variable or fixed, whereas a broker, depending on the broker and what panel of lenders they have, might have, for myself, I've got 42 plus lenders. I checked the board before I left this afternoon. We have 22 loans pending approval across 13 different lenders. So there's no one size fits all. Certainly one size may fit most depending on what's on offer, but there's always different circumstances for different people for their individual circumstance for what they're doing.
Yeah, it's more like partnering with the best product, not necessarily the specific bank.
Yeah, correct. And sometimes we might, sometimes use an analogy called a parking base. So it may not be the best, but we need to sort of park you in here to get your circumstances sorted. And then once they're resolved, we'll move you to the next best when that situation resolved itself.
In terms of refinancing?
Possibly, yeah.
Yeah. Awesome. So building a new home versus buying existing, the loan process, the difference between
Yeah, look, it's a great thing, and obviously with the government grants on offer at the moment, there's been a real shift in people interested in purchasing property. So Scotty from marketing, very happy with what he's done for the economy, and certainly stimulated the economy in regards to people certainly interested in building because of the government grants on offer. So if you were to purchase an existing property, it's a 30 to 40 day process. Typically there's no money on the table from the government. As a first home buyer, you might get a stamp duty exemption. So if I was to buy the same house, it might cost me 10 grand. For a first home buyer, it might be 2 to 3 grand in charges. So there's some cost savings, but importantly for people building, there's 2 grants on offer at present. One is the Queensland 15,000 first homeowners grant. You must be a first homeowner to get that. And the other is the federal $25,000 home builders grant. You don't have to be a first homeowner to get that, but obviously if you are, you can combine the two. So you've got $40,000 on offer. As a little disclaimer there, you've only got to the 31st of December. That $25,000 will drop down to $15,000. There's some income criteria and some build criteria as well, as in what the maximum build price can be. But it's worth noting those things, especially if you're thinking about it, and if you are putting it off, don't put it off for much longer because your grant could cost you $10,000 in grant.
Yes, and I remember looking at just the Renovators grant and the list of things that they wanted to know. It was literally, what did you have for breakfast 12 months ago on this day? You know, it would the amount of information that they require on the 31st of December. You need to really be on the ball and get started now.
Correct. Look, I've had a lot of inquiry about the Reno grant. Most people have kind of left it at that because you've got to typically engage one builder to do the renovations, which is typically what people aren't looking to do. So most of the inquiry personally that I've had is about primarily first home buyers or people looking to re-enter the market and taking advantage of that 25 and in some cases the 15 grand as well. So 40 grand on the table, very nice offer to take advantage of it.
Yeah, I've had a couple of people come to me with the $150,000 renovation. And by the time we actually look at all the criteria, we go, well, you could probably save some more money and get a better product if you just don't bother with it. And, you know, detach it from the house and make it a bit smaller, and then it might cost you 100 grand, and then you can do some landscaping and things like that, things that all had to be separate.
Yes.
And it's very complicated.
And obviously the other thing is a time frame. So if you're buying an existing home, typically in 4 to 6 weeks, you're potentially moving in. With a build, look, depends on when your land releases and that kind of thing, but you're probably talking a 4-month window as a minimum before you're potentially moving in. And I think even 4 months, to be honest, is pretty optimistic. That's realistically a best case scenario. No wet weather, no delays from councils for land being released, which is actually a bit of a problem at the moment because of the volume of people wanting to purchase. The land release is struggling to keep up. So a great problem, but not if you want to take advantage of some of the grants.
Yes, yeah. So with the government grants, what are available for buying and building, and what's going to change? So
there's an important thing to note, and obviously I've seen a lot of things in the media, and people have said things like, I used my 40 grand to buy a house and land package. That it's not incorrect, but it's probably a little misleading. You cannot use any of the grants to purchase the dirt or the land. You can only use it to work on the construction side of things. So you must have a deposit to acquire the land, and then you can use the government grants to start the build process. So as I said, for buying a brand new home and or building, there's at least $15,000 from the Queensland from the Queensland State Government for first homeowners only, and then if you're an owner-occupier, there's an additional $25,000 on offer, providing you do it before you sign a contract before the 31st of December. So you're running out of time if you're thinking about it. And as you won't miss out completely, but just be mindful that 25 grand will drop down to 15 from January 1.
So the criteria are the same, it's just the value is going down.
There's some of the criteria is going to change. Off the top of my head, sorry, I think it's 750 grand is the cap for how much you can build to get the 25 grand. I think that increases slightly, but I have got a fact sheet which I'm more than happy to forward through to anyone after, or Nikki can, which is generic. It's not bank specific. It's just here's the grants on offer. It's important to note too that not all banks have signed on with the grants as well. So some, even though the grants are on offer, your chosen bank or your preferred bank may not be participating in the scheme. So you can still get the grant, you just can't have the bank process it on your behalf, which could mean that you may not get the grant until the end of the build process. So if you're relying on the grants to start or during your build process, you may end up choosing a lender based on that criteria for that reason.
Yeah, which is something to really think about.
Yeah, there's also the government First Homeowners Limited Deposit Scheme, or the FHLDS. So basically that's in effect, you have a 5% deposit and the government guarantor the other 15% of your loan, and you borrow the other 80%, and you avoid what's called lender's mortgage insurance. So again, limited banks on that panel that are offering that program, and typically you can't use the FHLDS and the 25 grand home builders grant, but you can use the 15 grand state first homeowners grant. So it's a fair amount to take in, and worth noting. And it's worth speaking to, in my opinion, as again, I'm a little biased, but it's worth speaking to a broker who can help guide you through that process and give you the options of which lenders can offer what for your circumstances.
In following up on the government grants, we were talking earlier about who owns who's the first owner and a couple that got a. Yeah,
so for those who haven't seen that story, it was on a current affair a few months back, and basically there was a couple. They bought a property off a builder. He bought a property on what's called builder's terms. I did do a bit of homework on that again today. There's no further developments that I could see, and unfortunately, so the builder had bought the property on builder's terms, built the property, and then on-sold it to a young couple purchasing their first home. Quite rightly, in my opinion, the couple purchased the real estate, sold it, and the solicitor was under the impression that they would be eligible for the $15,000 first homeowners grant. The Office of State Revenue have said, well, sorry, you're not actually the first homeowner. Thankfully, I've never heard of that happening, and I don't think they will let it go in a hurry. But that particular circumstance, there's a bit of a technicality as to why they're not theoretically the first home buyers, because they're the second title holder. So it's worth double checking, and if in doubt, you can always check with the Office of State Revenue. That thankfully is a very unique circumstance, and I dare say the real estate agent will probably be ensuring, because they've sold it as a first home buyer, you can take advantage of the grant. So I'm not quite sure where it's at. There was no further news on that story when I researched it further.
But still, it's something to be aware of, just for the sake of checking.
Absolutely. Again, $15,000 on the table. This couple just didn't realise they weren't going to get that.
And some people rely on that.
Absolutely.
They go, okay, I can afford it. If I get this, then I'll go and do that and stay off the rental market. So, yes. I'll just check in. Questions?
A couple of questions. So there's someone on here, I think it applies to a few people, who already owns a house prior to getting married, and their wife is not on the title. Would she be eligible for the homeowner grant?
It's a great question. So in short, if you're a spousal couple, you won't be eligible for the Queensland 15 grand first homeowners grant, but you are eligible for the home builders grant, which is 25 grand until the 31st of December. Providing you meet the qualification criteria, which one of them being you must live in the property. So, for example, if you own a house now, so if I own a property and my wife and I live there, but my wife and I decided to buy a new house and live in that one and make our current one a rental, we would be quite legitimately eligible to claim the 25,000 home builders grant, but not the 15 first homeowners grant.
Okay. And another question, so how do you find out which banks are participating?
Well, there's a number of schemes. So one is you can utilise a mortgage broker, and that's our job, is to know. But if you're talking about the FHLDS, which is the First Homeowners Limited Deposit Scheme, there is a specific website called the FHLDS. But there's no, in regards to who's working with the home builders grants and that kind of thing, there's no specific list that I'm aware of. You'd either have to speak to a broker, or if you've got time, just ring 40 odd lenders and see what they say, or you can speak to one broker, and more than likely they'll be able to, if they don't know, they'll be able to find out and come back to you. I'm an advocate for speaking to a free service mortgage broker. When myself or our team are more than happy to help you, but you can choose any broker that you like.
Awesome. So I got a question from David today, and he said is 60 plus self-employed mortgage on an investment property at 3.68%. Can we do better?
More than likely, yes. So it's difficult to say. Look, yes, absolutely. So my advice to anyone who holds a mortgage, whether it be through a bank or a broker, doesn't matter, is hit up your current lender, either through your broker or directly with the lender, and say, look, I want a better deal. If you're not happy with it, then have a look in the market at what you're going to do. Now, last year there was obviously the Banking Royal Commission, which changed the lending landscape fairly dramatically. So previously, a 60-year-old buying a rental property wasn't seen as a big deal, because if that person got in difficulty, they would simply sell the rental property off and be business as usual. Post-Banking Royal Commission, that's not quite the case. So it's all about what's called exit strategy. So in other words, will the lender be on a current affair for lending that person a 60-year-old a rental purchase? So if, for example, you didn't own anything else and you just wanted to buy that property, look, probably not. It's probably not a loan that you would get. It's hard to say without knowing the circumstances, but certainly some lenders are more age-friendly than others. And it's all about the exit strategy. For example, what do you do for an occupation? So if you're, for example, a roof tiler, probably 65 might be as realistically as old as you can work to, whereas for someone like myself, it's a very administrative basis. As long as I have mental capacity, which arguably I do, I could work till potentially I'm 70. So I've arguably got a longer working life to potentially repay the debt.
Yeah, that's right. And even if you were a roofer, if you were running your own business and then you were going off the tools, and that's something that could be put forward.
Yeah, so it's a horses for courses, depending on circumstance.
And self-employed would be a lot different to...
It can be. It depends, especially if they have super, it's a big advantage. And also what type of business. Is it a saleable business, or is it, for example, John Smith Plumbing, where it's a one-man band with a van? There may not be much of a saleable asset. So it's simply that arguably they perhaps just they bought themselves a job, if you like. So there may not be, as from a bank perspective, as much as a comfortable exit strategy for them.
Awesome.
There was a question there.
Yes, another one. So in the current climate of COVID-19, would you recommend variable or fixed term?
Yeah, look, that's a fantastic question as well. Look, I'd like to think with COVID we're largely out of the woods in that regard. So look, and it always depends on your circumstance. The thing with variable, typically it allows complete flexibility. So you can pay extra, you can redraw, there's no restriction, there's no penalty. Just be mindful, and there's no penalty. You can pay out the loan on variable at any time without fee or penalty. If you're on a fixed rate and you break that fixed term by selling or refinancing, the bank are within their rights to charge you a penalty. Typically, there's also restrictions on paying extra on a fixed loan, and also if, let's say, you're 10 grand ahead on your fixed, as a rule, you can't redraw those surplus payments back. So we're doing a lot of loans at the moment with what I call a blended mix, so part fixed, part variable, because you get the best of both worlds. And there's fixed rates off the top of my head, I think 1.89, 4 years. There's some unbelievably sharp fixed rates on offer, but it's critical to, if you're planning to sell in 2 years, please don't do a 4-year fixed loan because the break costs will haunt you, and you may end up being locked in or being penalised to get out of that when you go to do that. So you do lose a bit of your flexibility to in that environment. But certainly there's some very, very strong fixed rates on offer, but just be mindful of, I rarely recommend locking your entire loan in.
Awesome. Do I need to do a credit check?
So yeah, great question. So a credit check is is borderline crucial in the current climate. The lender will do a credit check on you. There's no ifs or buts about that. They will absolutely do that. Most people, if they have a problem on their credit check, they actually don't realise until they're during an application process. So the problem is the clock's ticking, they're under pressure because there's a finance clause pending, there's buyers and sellers and solicitors and real estates chasing them. So in my opinion, yes, you should do a credit check. I personally subscribe. I pay an annual fee and I get my credit check once a month. You can go to a free website called mycreditfile.com.au. You can do a one-off credit check once a year without fee. That website is independent of lenders. Some lenders are quite clever and they actually own credit check sites, like My Credit Savvy, for example. You still will get a fairly accurate credit check from them, but in my opinion, if I was to only do one, I would just use the website mycreditfile.com.au. You can do a free check. If you need advice on what your credit check means, we're more than happy to help you. Again, you can go to your preferred credit provider to seek advice. Again, I personally pay a monthly fee, so every single month I get my credit score and credit rating, if you like. Also, I get what's called a credit alert. So if someone steals my identity, if you like, and they apply for credit, I get an alert and it says ABC Bank or credit provider is doing a credit check on you. So the first thing I do is I ring my wife and find out what we're buying. And assuming we're not buying anything, I can, which hopefully is the case, I can ring the respective lender and say, look, what's going on here? Because chances are if someone's stolen my identity and they're using it to purchase something, they're probably not going to be paying that back. So it's going to leave me with the credit debt, and that means I need to, more than likely I can get it resolved, but it's time. And if I'm buying a property, I simply won't have time to engage that process to get it resolved in a timely manner.
Absolutely. And identity theft is a lot more common than you realize.
Especially in a digital age. And if you've seen a movie, Catch Me If You Can, I was fortunate enough to hear the real guy, not DiCaprio. I was fortunate enough to hear him talk a few years ago. And he actually said in his presentation that if he had the tools that were available now, he reckons they never would have got him. Yeah. So if you haven't seen that movie, it's not a bad watch.
What can I do to get the banks to see me in the best light?
Great question. So, look, I would, and again, I'm a little biased in my answer here, but I would recommend going through a broker. Our job is to package your loan in its best possible light and present to you in the best possible, with the best possible chance of success. Obviously, we can't commit fraud, but it's presenting your loan in the best possible light with the lender that's going to give us the best answer for your circumstances. So it's not unlike a first date. It's harder to get that first impression again. So our job is, as I say, is to present it with the person who's most likely to be a match for you. So we're kind of like Tinder, I guess, for loans. But yeah, that's our job, is to present it in the best possible light. But be mindful of things like not overdrawing your accounts. Be mindful of what you spend in 90 days in the lead up to a purchase. Because the lenders will look at your transaction history. They will ask you questions, in my opinion, quite invasively so, about what your transactions are, what have you been purchasing, if you've got overdraws on your account or a dishonour on a personal loan, even though that may not be relevant to your home loan, their concern will be perhaps about your conduct, which could actually adversely impact your home loan application. So it's important to note that even though you think, I just overdrew my account by $5, by itself it's probably not a big deal. But some lenders, that is a big deal. So, and again, it's important to know, unless you know who has a problem with that, that's what we do in the back end before the loan is lodged. In some cases, we have no choice. We've kind of got to run the gauntlet and see how it goes. In some cases, it's no problem. In other cases, it's a big problem. And then we can potentially start that application process again with the next best lender who's okay with that circumstance. So
it's almost like disclosing everything to you and then go, okay, they won't like this and they won't
correct.
like that.
And as I say, we can't commit fraud. Like sometimes people say, oh, you have to tell the bank I've got kids? Well, yes.
Kind of important.
Some days we wish we don't have them, but as a rule, they're pretty good. But again, we can present the loan in its best possible light to give it the answer that you want without being fraudulent. Obviously, I guess it's not unlike if you were going to court. You would tell your solicitor everything. The solicitor would present it in the best possible light, still being legally correct, and that we're not dissimilar in that regards.
Question.
So what does a mortgage broker cost? So what are your fees?
Fantastic question. So it adds up to zero. Some mortgage brokers do charge fees. If they do, they must provide what's called a credit proposal disclosure. There is, and it's a signed document, so it wouldn't be a surprise. Personally, most brokers, myself included, don't charge fees. There's no fees. The rates, fees and charges dealing with a mortgage broker are the same, if not better, than going direct to a bank. So for example, if I was to do an ANZ loan, doesn't matter, loan for you and you went to a branch or you did it through us, you would be paying the same, if not better. There is no adverse impact in dealing with a broker than going directly to a bank. Obviously, the other advantage is the convenience, that we will come to you after hours or meet at a time that suits.
You don't have to line up for hours.
Correct. It just makes life easy. Our whole job is to make life easy for the customer. Sometimes it may not feel like it, but we're all dealing with the bank's processes, especially post-banking Royal Commission. But thank you, that's a great question.
We'll get onto some renovation stuff now. So I live in my own home. How do I get a loan to renovate?
So yeah, great question. So the lenders look at a term called loan to valuation ratio. So in other words, how much do you owe versus what the property's worth? So for ease of figures, let's say your house is worth $100,000, sorry, and you owe $80,000, your loan to valuation ratio will be 80%. So you owe 80% of what your property's worth. So some lenders, for example, whatever you like.
Mm-hmm.
So in that example, if you wanted 10 grand to do some renos, pretty much I would expect that to be no problems at all.
Mm-hmm.
Most lenders will go up to about 50 grand without too many problems. Mm-hmm. So if you wanted to put a deck or a pool, solar, reno, kitchen, bathroom, that's okay. But it can depend on your loan to valuation ratio and obviously the lender. So some lenders, if you're borrowing less than 80%, will be quite comfortable for you to take up to $250,000 out in cash, as long as you have to state the purpose.
Yeah.
If you said, look, I'm going to go and put it on blacks and reds, then they probably won't be real keen to do that. But assuming you said, look, this is my intention, I'm going to invest in shares, I'm going to renovate my property. But once you're going much above 50 grand, quite often the lender will ask for either quotes to say, well, look, what are you intending to do? Alternatively, they may even ask you to get what's called a fixed price contract from a builder, 2 or 3 builders, for example, if you're getting a pool and a deck and
different contractors.
Spot on.
I can't speak.
Yes. And then the bank will control those funds, so that, and they will add that to the as-is valuation if they're controlling funds. If you're just getting the cash and you want to control the funds, they won't take the proposed improvements into the valuation yet until they're done.
Finished. Yeah.
Yes. So that can be relevant too, depending on who the lender is and what you're looking to do. And look, it also can depend if it's structural or non-structural renovations. So for example, if I was going to add a floor under my house, that's fairly significant. The lender will probably insist on doing what are called fixed price contracts. So they want a builder and they'll control funds to the relevant builder. However, if I was just going to renovate my bathroom and my laundry and kitchen, they'd probably be quite comfortable with that. Probably not likely to insist on building contracts, and you could probably engage your own suppliers to do that without too much difficulty.
What do you mean by control?
Oh, great. Yeah. So if the bank will do one or two things. So you'll say to the bank, look, I want 50 grand or whatever it is you're looking for, and they'll say, yeah, the loan settles in 30 days. Here's your lump sum money. You pay your contractors and builders as you see fit. If the bank's controlling the funds, the builder will issue what's called a progress draw or a claim. Typically, there's 5 during a fixed price building contract, assuming it's QBCC. Thank you. QBCC. And typically, there's 5 progress draws. The builder will do a certain percentage of work, issue an invoice. The customer will sign, give it to the bank. The bank will release funds to the relevant builder. Even though it does slow the process potentially by 3, maybe 5 days, it's not a terrible thing, because typically there's a customer protection mechanism as well. Obviously, if that builder hasn't done the work, it's fair to assume the bank are less likely to pay the builder for the work that's not yet done. So it is a little bit, it can be a little bit more paperwork, a little bit more cumbersome, but it is also a protection mechanism for customers as well.
Yeah, and that's something that we help out with as the third party, following what's happening on the site. So we generally try and be that couple of days ahead and go, yep, we can see the slabs being poured today, we'll go and have a look. Yep, so your progress claim, if you do it in the next couple of days, we know it's already done, we know the Rio's in there, we know, yep, so it's just a case of, if we've already done it, there you go. So it's a lot faster and less paperwork for people to do.
And getting a lump sum payment where you're controlling the funds, sometimes you may be able to negotiate perhaps a slightly lower price with your contractor, so there can be an advantage in doing it that way. Some builders obviously aren't interested in doing that either, but it's depends. You just need to have a chat with your builder, but it also will largely depend on your respective bank who you're dealing with as well.
How they want to go about distributing the funds. So I live in my own home. How do I get a loan to build a new home?
So you're going to sell your house or rent it out and then do a new one. So what we do, it's all about what your future intention is with your current property. So if you're going to sell it, we obviously factor that in and do the loan accordingly. If you're going to rent it out, we'll get in effect arrange a bank valuation on your current property, find out what the market rent is currently. Let's say it's $400 a week, it doesn't matter. We'll then do in effect a construction loan for the purpose of at least the application, making your existing home a rental, and then we commence the build process. Typically, there's two parts to a construction loan. One is the land acquisition, and part two is the bricks and mortar, the build process. So quite often the land will settle. It might be 4 to 6 weeks before the construction commences. By the time the title's released, you've got council approval and that kind of thing.
So could I live in my existing home and then purchase some land and let it sit there for 6 months, save up a whole heap of money, and then build my dream home?
Absolutely. Just be mindful though, not all lenders like that. So some lenders will only lend on land if your intention is to build. And the other thing, in my opinion, if you're going to do a land loan, in my opinion, it's critical to do a construction pre-approval, even if you're not intending to build now, just so you know that if your circumstances don't change, that when you go to build, more than likely your loan would be approved if you were to. And while you're doing the application, it's no real extra work to do the pre-approval. So you just do loan A for the land, loan B for the build, pre-approval, and it's just sitting there ready to roll for you.
So you know how much your build costs?
Well, you might say, well, look, I'm going to build for 250 grand and the land might be 220, whatever the case may be. But as I say, even if you never use the pre-approval, at least you know that if your circumstances don't change significantly, that more than likely when you go to build 6 months' time, a year's time, whatever it is, you'd more than likely be approved for that situation, because you don't want to get stuck with a block of land and then when you go to build, oh, sorry about that, you're not going to be able to build on that and you have to perhaps sell it or whatever.
And it's still, you have to pay the fees on the land.
Your rates and the holding costs. So you probably won't have insurance. I have had the odd person do insurance in case someone breaks their leg on the land or something like that, but in reality, most people just have the rates ongoing and obviously the interest on your loan while you're going. The banks typically want to see, they like to get some money each month. So,
funny that. Do we have any more questions? No? Okay, we're just about up for time, aren't we? A couple more minutes. All right. See, there's a couple more questions here. They're all about how much renovations costs and consultants' fees and staff. We have this nice little renovation checklist that goes through how long you expect to do, say, a kitchen renovation, how much they're likely to cost, all those sorts of things. So if you sign up to our newsletter, you'll get sent that because we're running out of time. Tips for not defaulting on a loan.
Look, I suggest to tie your loan in with your pay cycle. So if you're getting paid weekly or fortnightly, tie it in with your pay cycle. It makes it easier to do that. And if your payment is $390, round it up to $400. So you're not going to notice it too much by rounding it up. So I think the more frequently you can make repayments, the better it is for you. Work in a budget that's going to suit. When I'm doing a loan for someone in Logan, which is primarily where our business is located, or for the clients we do, I normally suggest to add $100 a week to the loan repayment for rates, body corporate, insurance, repairs, maintenance, all those kind of ongoing incidental things. So if your repayment's $300 a week, work on $400 a week. So you can do things that will help you to budget and that kind of thing, but don't pay what's called a lazy tax on your home loan. If you haven't reviewed your loan for at least 12 months, please do that tomorrow. Give yourself a Christmas present. If you want to speak to a broker, we can help you. Go to your preferred mortgage broker to do that, or go directly to your bank. And like I said earlier on, approach them, ask them for a better deal. If you're not happy, have a look around and see what's on offer. If you utilise someone like ourselves, we can do this for you. There's no cost or obligation for you to do anything. I like screwing the banks down. It gives me great pleasure. I actually had someone in the Cornubia area. They were actually an ex-CBA staff member. And they sort of said, well, I think I'm probably wasting your time. We got the bank to, she's not a client of ours, we got the bank to lower her rate better than what you got as a former staff member.
Wow.
So the bottom line is a broker will work for you, not a bank. So utilise us. People drive 15 kilometres to save 4 cents a litre on their fuel, but when it comes to a loan, they'll just go to their bank because that's the one they've always banked with. So utilise us in that way.
And I think too, if you, especially right now, if you were able to refinance for a lower rate but still able to pay the same amount, you'll pay off your home earlier, you might be able to do renovations earlier, go on holiday when you're allowed to, all of those sorts of things. So yeah, just final check, do we have any more questions coming in?
There's one more. So how long will it take for a loan to be approved?
Great question.
Next year, 2020, 21.
Hopefully it'll be quicker than it is at the moment. It depends on the lender. Some lenders are 30 plus days at the moment. Some lenders are still at 2 days. So again, it depends what your circumstances are. My advice, if you are seeking finance on a property, to please allow a minimum 21 days finance and then allow a further 21 days for settlement. So about a 40 to 45 day woe to go process. Hopefully it will be quicker, and there's things you can do to speed it up, such as pre-approvals and that kind of thing. But pre-approvals aren't always given priority from the banks. So but hopefully quicker than they are today is my short answer.
Awesome. All right. Well, thank you very much, Scott.
And just on the grants. So
the grants, yeah. So the grants, the way they are now and the way they will be in January.
Yeah, so we put a sheet, you probably can't see it here, but we put a sheet together. It's got the grants up until the end of December, then the grants post January 1. I'll get that emailed over to Nikki, so if you'd like a copy, please contact Nikki, or you're welcome to contact me as well if you prefer, but just contact Nikki and she'll be able to forward it to you. It has nothing to do with banks, it's purely about what grants are on offer and what the limits are, what the income caps are, what your property values are.
Yeah, so you have an idea of what you can and can't do.
Absolutely.
And yes, so if you subscribe, then you'll get a summary of tonight, and you'll get the renovation stuff as well. There's a cat wandering around. That's okay. Yes, if you want that too, you sign up, okay? Yes, so thank you very much.
Thank you for the opportunity to come along. I hope it's been valuable for you. And like I said, I probably said to you, I could never promise anything profound, but hopefully something came out that was useful to you.
Yeah, so we could. So everybody stay safe over the holiday season. Make sure you have your fire plans up to date. And if you live in the tropics, your cyclone kit ready to go. We will see you again the second week of January. If you have any other questions, any other things that you want either of us to answer, please post and we'll get to them in the next couple of days. And also, see as a Q&A, please let us know and we will do one for you. So thank you very much. This is Scott Beattie from Cube Home Loans, Nikki Farrell from Totally Wicked Group. You have a totally wicked evening. Thank you.